For centuries, Jewish communities have developed and perfected financial principles that have stood the test of time, economic crises, world wars, and technological changes. To this day, these same laws remain the foundation of success for some of the most powerful businessmen on the planet. What you'll discover in the next few minutes could completely change your relationship with money. Financial laws worked during the Roman Empire, the Middle Ages, the Industrial Revolution, the World Wars, and they continue to work in the age of artificial intelligence and cryptocurrencies. They remain just as powerful as they were 3,000 years ago. The question isn't whether they work. Let's look at what they are. Law number 1. Money is energy, not pieces of paper. The first law states that money is not what you have in your wallet, but the energy that flows through your life. Ancient Jewish texts teach that money is like water. It must constantly move to remain pure. When you accumulate money without circulating it, it stagnates and loses its power. Mark Cuban, owner of the Dallas Mavericks, applies this law religiously. Cuban never keeps large amounts of money idle in bank accounts. Instead, he's constantly investing, reinvesting, and moving his capital around. Still money is dead money, says Cuban, echoing this ancient Jewish wisdom. Furthermore, this law doesn't just apply to millions of dollars. It works just as well with just $100. If you have money stashed away for emergencies and never touch it, you're violating the first law. Money should work, even if it's in small investments, financial education courses, or tools that generate more income. The key is to understand that static money loses value due to inflation. In these times, with fluctuating inflation rates, keeping money under the mattress is a guarantee of gradual impoverishment. The Jewish sages understood this centuries ago. Money must multiply or it will die. Law number 2. Never put all your eggs in one basket, but know each egg. This second law is probably the most misunderstood in the modern financial world. It's not simply about diversifying your money, but about deeply understanding every investment you make. Larry Ellison, founder of Oracle and one of the richest men in the world, is a perfect example of this law. Ellison doesn't invest in hundreds of random companies. Instead, he focuses on sectors he fully understands: technology, luxury real estate, and yachting. Each investment is calculated, researched, and aligned with his deep knowledge. Ancient Jewish merchants applied this same philosophy. They didn't trade in any merchandise that arrived at the port. They specialized in textiles, spices, or precious metals, but they knew every aspect of the business, from the origin of the products to the best times to sell. Peter Thiel, co-founder of PayPal and Facebook as first outside investor, took this law to the extreme. Instead of diversifying across multiple tech startups, Thiel focused on a few investments but studied them extensively. His $500,000 investment in Facebook grew to over $1 billion because he deeply understood the potential of social media. This means that before investing in cryptocurrencies, Tesla stock, Amazon, or real estate, you must become an expert in that area. It's not enough to follow advice from TikTok or YouTube. You must understand the fundamentals, risks, market trends, and real opportunities. Law number 3. Time is your most valuable partner. Keep this in mind. Time can be more powerful than initial capital. This law is based on the concept of compound interest, but goes much further. Jeff Bezos understood this law when he founded Amazon in 1994. He didn't have the capital of competitors like Barnes & Noble or Borders, but he had something more valuable: a long-term perspective. While other companies sought immediate profits, Bezos invested every dollar of profit back into the company for years. Time became his greatest competitive advantage. The Jewish sages taught that a small amount of money invested wisely over decades is worth more than a large amount invested poorly over a few years. Albert Einstein supposedly called compound interest the 8th wonder of the world. In modern terms, this means that a 25-year-old investing $100 a month can accumulate more wealth than a 45-year-old investing $500 a month simply by the power of time. Jack Bogle, founder of Vanguard, also demonstrated this law by creating low-cost mutual funds that allowed ordinary people to benefit from market growth for decades. His philosophy was simple: time in the market beats timing of the market. Let's look at a concrete example. If you invest $200 a month from age 25 to age 65, with an average return of 7% per year, you'll accumulate approximately $1.37 million. If you wait until age 35 to start with the same monthly amount, you'll only accumulate $610,000. Those 10 years of difference cost $760,000, or almost half. Law number 4. Intelligent generosity multiplies wealth. This fourth law is perhaps the most counterintuitive of all. Giving money strategically can multiply your wealth. This isn't blind charity, but intelligent generosity. Bill Gates and Melinda French Gates have donated more than $50 billion through their foundation. But this generosity hasn't made them poor. On the contrary, their strategic donations have created a global network of contacts, investment opportunities, and recognition that has multiplied their influence and, indirectly, their ability to generate wealth. Chuck Feeney, founder of Duty Free Shoppers, took this law to the extreme by secretly donating nearly $8 billion during his lifetime through Atlantic Philanthropies. His strategic donations to education and healthcare not only transformed communities, but also opened up business opportunities in markets others considered inaccessible. Medieval Jewish merchants applied this law by funding synagogues, schools, and community projects. These investments created networks of trust and reciprocity that opened up new commercial opportunities. A merchant who funded a school in Venice could gain preferential access to trade routes in Constantinople decades later. This doesn't mean you should give away all your money. It means you should invest strategically in relationships, educating others, and projects that build your reputation and network. A mentor you support financially can open doors worth millions. A community project you support can connect you with influential investors. Law number 5. Turn problems into golden opportunities. The fifth Jewish law states that every economic crisis, every social problem, every apparent difficulty is a disguised opportunity to create wealth. Michael Dell, founder of Dell Technologies, applied this law perfectly during the 2021 semiconductor crisis. While other companies complained about chip shortages, Dell reorganized its entire supply chain, invested in direct relationships with manufacturers, and emerged from the crisis stronger than ever. Howard Schultz, CEO of Starbucks, applied this law during the 2008 financial crisis. As other restaurants closed locations, Schultz saw an opportunity to negotiate lower rents and acquire prime locations at historic prices. Starbucks expanded aggressively during the recession and dominated the market when the economy recovered. Jews have applied this law for millennia. During the Great Depression of 1929, as many lost everything, Jewish families like the Rothschilds identified opportunities in the real estate collapse and bought properties at historic low prices. Decades later, those properties became family fortunes. Sam Zell, known as the king of real estate, built his empire by applying this law. Zell bought distressed properties, restructured them, and sold them when a market recovered. His philosophy: when everyone is selling, I buy. When everyone is buying, I sell. This means training your mind to see opportunities where others see obstacles. Artificial intelligence is eliminating jobs, but it's also creating entire new industries. Inflation is affecting purchasing power, but it's also creating demand for investments that protect against inflation. If you find this video helpful, please give it a like and subscribe to the channel so you don't miss our next content. Law number 6. Educate your mind before your wallet. Learn this: you can never make more money than your mind can handle. Your ability to generate and maintain wealth is directly limited by your financial education. Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund, invests millions of dollars annually in his own education. At 75, Dalio continues to study economics, psychology, history, and philosophy. "My mind is my most valuable asset," Dalio says. Charlie Munger, Warren Buffett's partner at Berkshire Hathaway, is famous for reading constantly. Munger says, "In my entire life, I have not met a single wise person who didn't read all the time." 0. At 99, Munger was still reading multiple books weekly. Jewish texts teach that an investment in knowledge is the only one that can never be stolen, devalued, or lost. During historical persecutions, when properties were confiscated and businesses destroyed, knowledge allowed Jewish families to rebuild their fortunes in new countries. Einstein is a perfect example. When he fled Germany during the Holocaust, he lost all his material possessions, but his knowledge allowed him to rebuild his life in America and become one of the most influential figures of the 20th century. You should invest at least 10% of your income in financial education. Books, courses, mentors, conferences, and experiences that expand your understanding of money. Warren Buffett reads 500 pages a day, or Elon Musk educated himself about rockets by reading aerospace engineering books when he decided to create SpaceX. Law number 7, build systems, not just revenue. The 7th law establishes the difference between working for money and letting money work for you. It's not about earning more, but about building systems that generate income without your constant presence. Reed Hastings, co-founder of Netflix, applied this law masterfully. Instead of creating just another movie rental company, he built a scalable system that operates 24 hours a day in 190 countries, generating $31 billion annually without Hastings having to approve every single transaction. Sarah Blakely, founder of Spanx, started selling hosiery out of her home, but quickly realized she needed to systematize. She created manufacturing, distribution, and marketing processes that worked automatically. By the time she sold a majority stake to Blackstone for $1.2 billion, Spanx was operating as a standalone system. Ancient Jewish merchants built trade routes, not just sold goods. They established credit systems, networks of trust, and processes that continued to generate profits even when they were not physically present. Bills of exchange, invented by medieval Jewish merchants, revolutionized international trade because they systematized transactions. Ray Kroc transformed McDonald's by applying this law. Instead of just selling hamburgers, Kroc systematized every aspect, from food preparation to employee training. He created a system that could be replicated worldwide. Identify how you can systematize your income streams. If you're a consultant, how can you create online courses that sell while you sleep? If you're an artist, how can you license your work to generate recurring royalties? If you have a traditional job, how can you develop passive income streams that don't rely on your time? Law number 8, patience is more valuable than speed. This 8th law distinguishes the truly wealthy from those who merely have money temporarily. Strategic patience is more powerful than impulsive action. Warren Buffett is the ultimate example of this law. His decades-long buy and hold strategy has turned Berkshire Hathaway into one of the most valuable companies in the world. Buffett bought Coca-Cola shares in 1988 and has never sold them. That $1.3 billion investment is now worth more than $25 billion. Jeff Bezos applied this law when Amazon lost money during its early years. Impatient investors sold, but Bezos maintained his long-term vision. His patience was rewarded when Amazon became one of the most valuable companies in the world. Jewish merchants understood that true fortunes are built over generations, not quarters. Families like the Rothschilds thought in decades and centuries, not months. We live in an era of instant gratification, but patience remains essential for building real wealth. Cryptocurrencies can rise 1,000% one month and fall 90% the next. Quality stocks grow 10 to 15% annually for decades. These 8 laws are practical principles you can implement immediately, regardless of your current financial situation. If you have, say, $10,000, apply the first law by putting it to work instead of keeping it static, even if it's in a savings account that pays 0.5% annually to start. If you have $1,000, invest it in education following the 6th law. If you only have $100, use it to start building a network, applying the 4th law of intelligent generosity. The secret isn't the amount of money you have today, but your willingness to apply these laws with consistency and discipline. A college student earning $50 a month who applies these laws can build more wealth than an executive earning $5,000 a month who ignores them. The question is whether you are willing to apply them to your financial life with the discipline and consistency they require. If you enjoyed the video, remember to subscribe to the channel and share it with someone who might find it useful. See you next time.